Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. In this video, we're going to talk about the weekly watch list for the S&P Emini 500 futures and other stocks for October 30th, 2022. Are the bulls running wild? Is going to be the topic of this video. You will soon find out as we dive into it. But first, do me a favor. Hit the like button, hit the subscribe button, and make sure you turn on the bell notifications as I am starting to do live streams. This week, I'll probably do it around Tuesday and Wednesday evening, I'm thinking. Probably around 5:30 Pacific time. So make sure you guys check that out where I do a live trading, education, things like that. But let's jump right into this video. Are the bulls running wild? Weekly watch list for October 30th, 2022. Well, last week I said that we had a inverse head and shoulders starting to form. I said we had a shoulder, head, shoulder here, and then here was our neckline. And guess what? We kind of had a quick little baby pullback and rallied higher. Now, I drew these levels last week, Fibonacci extensions for potential targets to the upside, right? And guess what? Look where we landed, right at the 127.2. Okay, we also kind of have a double top. If we are now bullish because we took out this high, right? The next level we need to take out is this, and then this one, this one, this one, so on, right? But with that being said, how much higher could we go? Well, back at kind of, I'm going to say for the last few months, I said that we were going to around the 3,400. If you watch my old videos, we got to 3,500. Kind of missed it by a couple points, right? That 34 plus print, right? And then I said I thought that was going to be a low for a while, and guess what? Looks like it's gonna be a low for a while potentially, right? With that being said, I also said with this inverse head and shoulders, or kind of right on this reversal weekend watch list, I said we could probably get back up to about the 4,000 level. It looks like we're marching all the way up to it. Now, a couple levels to watch. This 1618, right? Because if we kind of look, it's this right around this level, all this consolidation here, right? And the 1618. Also, it's a low volume node on our market profile chart. Second, we have the 200 period moving average right here. So right around the 470 or something. 4,070 levels. So somewhere inside there, I think we'll probably rally up to and pause. Now, we are seeing something kind of interesting in the overall market. Amazon, Google, Meta, they all got whacked this week, okay, with their earnings. And guess what the market did? It rallied in the face of it because energy stocks are rallying, bank stocks are rallying, consumer goods, right? We're talking Pepsi and all those other food companies, right? They're all rallying because they're all making record profits because they're all price gouging us, right? It's no longer inflation. It's they could raise prices, and as long as people keep paying them, prices will stay high, right? The cure to higher prices is higher prices, and eventually things get too expensive that people stop consuming them, and it brings it back down. With that being said, that is what's moving the market. Remember, for years, right, it was a lot of more Apple, the FANG stocks moving us higher, right? This entire move up, right? Tesla, all those. Well, now what's moving us higher are those because Google, Amazon, they've all got whacked. Apple is the only one that actually is doing any good right now. We'll get to that, but I just want to kind of point that out. I like this level right here, probably this 47 4070 to 4020 level, somewhere inside there. I think we should pause from this massive rally up. Okay, so just something to think about. Let's take a look at the NQ. Okay, and we're probably going to see, look at the NQ. We haven't even broken out the head and shoulders yet, right? We have the shoulder, head, shoulder, neckline. We didn't even break out. So what's happening is the Dow and the S&P are way outperforming the Dow. Outperforming the NASDAQ. Something interesting going on. So keep that in mind. Not saying there's a trade, but I think this may kind of pop its head up, maybe get up at least to this high volume node of around 12,000, but just something. But real quick, if you want to help support my channel, get some trading education, and also get weekly S&P Emini trade zone levels, support, and resistance, then you need to sign up with my $99 lifetime subscription, one-time payment of the S&P weekly trade zones, where you will get support and resistance levels, any open gaps and VPOCs, and you will also get a 7-hour video course of my top 5 trading strategies that I go over, that I use on a daily basis. Also, as a bonus, you will get over 30 free Thinkorswim custom indicators and charts, and you will get on a weekly basis every weekend Thinkorswim share chart, so you can upload the drawings directly to your charts. If you use another brokerage firm, here are all the levels that you'll be able to draw your own levels on. So make sure you check out daytradingfearless.com to sign up, or the link down below. Again, $99, but back to the video. Okay, with that being said, let's now take a look at crude oil. Crude oil kind of just lounging around, right? Just kind of going sideways, really not doing anything. If we do break above 94, watch out. Oils can be going higher. So what I think could take oil is if the forecast over the next few weeks starts getting colder, people are going to need more heating oil, things like that. Crude oil may start to rally off that. Let's take a look at Bitcoin. Bitcoin, interesting, right? Shoulder, head, shoulder. We're still in that shoulder. We looked below and failed. Yeah, Bitcoin does not look healthy as the rest of the markets are rallying. Bitcoin's doing absolutely nothing. So if the markets do roll over, the Fed's can be coming out soon. We have midterm elections coming up. If things don't look good, or something happens, not saying one way or the other, just something to be aware of. Gold doing absolutely nothing. Maybe a shoulder, head, shoulder, neckline. Gold kind of looks a little bearish to me, unless we could kind of really break out above this 161 level. Let's take a look at silver. Silver is, again, same thing, but shoulder, head, shoulder, neckline. Okay, doesn't look good. I thought I'd be able to pull something up, but I can't. Let's take a look at Apple. Okay. Apple, remember we drew these fibs, I believe last week. Watch for this, right? Probably can get back up to probably this 75 level percent of fib retracement, 165, but again, we will see. AMZN. Let's go through these real quick. Nice gap, right? Made new lows, but buyers came in. Is this a potential look below and fail, and then that's off to the races? Maybe, but I think it all depends what the overall market does. TSLA, Tesla, kind of going nowhere down here, right? Near the lows. GOOGL. Okay, just trying to show you guys what's going on. This is why the NASDAQ is lagging, right? Because all these other stocks are lagging, right? They're kind of made new lows, right? Think about it. All these stocks are making new lows while the S&P is rallying. Okay. So just something to be aware of. At what point, me personally, I think the Fed's going to start talking about, hey, maybe starting to slow rates down, right, and not raise over the next month or two. But then what happens is, I think it becomes a third phase. First phase was raise interest rates, right? Second phase is, okay, when are they going to stop? And now the third phase is, how many jobs are we going to lose, right? Because of all this, you're seeing companies lay people off. When does that start to creep in? If it does, if we start seeing negative 100,000, 200,000 jobs, that could take the market back down. So just something to think about overall. But as always, thank you for watching these videos. Be careful. Remember, I'll be live next week, a couple days. Make sure you turn on that bell notification. Until then, we'll talk to you soon.